I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is December 15th.
And today we'll be talking about two really big announcements. Number one, inflation numbers. Number two, what the Feds did with the Fed funds rate. And then we're going to give you the interest rate update.
This is for informational purposes only, not financial advice. There's a lot of slides we're going to go through, a lot of information. So let's get right into it.
Fun. Let's do it.
Yeah. Okay. So on Tuesday, December 13th, the inflation number came in lower. It came in at, the expectations were 7.3%, came in lower, which is really good, 7.1%. Keeping in mind that last month, inflation was at 7.7%.
Right. And remember, inflation's bad right now because the higher inflation is, the higher the Feds are pushing interest rates. So the lower the inflation, the less the Feds are going to want to push that down by using higher interest rates.
That's right. And as we go through these slides, you're actually going to see, hopefully this building case, this thesis that rates will come down. So let's go further in here. The inflation number, basically, it was good news for stocks, and it's been mixed. I mean, it's good for inflation coming down, and it's good for stocks. Mm-hmm. But of course, we all know our grocery bills are still really, really high. Rents are still high right now. But gas prices, oil has been coming down, so we've been noticing that at the pump.
I just filled up the other day, and I'm like, holy cow, I actually have some money in my wallet.
Yes. So those are kind of the most notable things there from the inflation report. Here's a graph showing back to 1965, the inflation. In that dark blue, you'll see the inflation number at 7.1%, according to the New York Times.
It's coming down. Look at that. I mean, that's huge. We've been all waiting for that.
So we're really hoping for it to come down later into the 2023. So let's go further, and we'll show you how we see that happening. Okay, now inflation. This is the 12-month chart. Okay, so it looks like a triangle or a big mountain goes up and goes straight back down. This is 1 year ago.
I just had a daughter, working on geometry. I don't remember exactly what the word is for the equal length legs of a triangle, but as you can see, it took us about 6 months to get, from the first point to the high point, and then 6 months later, we're almost at that equal point, which is what people have been interested in. Is inflation going to come down as fast as it went up, or is it going to be slower? Right. So what this is showing is that it seems to be coming down just as fast as it went up.
And this is from the U.S. Department's website here, or the information is where we can see that June 2022, it peaked at 9%. Okay, now what we're going to show you, and then currently it's at 7.1. This is from a third-party source. It's called Trueflation.com. It's not a government run. It's private organization that looks at about 10 million price items per day, and it tracks. So the government's working on this archaic system, once a month reporting, but they literally have people go out to stores and products and get updates.
Are you telling me the government's archaic?
Oh my gosh.
Oh my goodness.
It's like the MVD of information here. The Trueflation.com has been showing the data points up to date every day, and what they've noticed is, according to them, inflation peaked March 11th at about 12%. The real inflation they say is about 12%. That was in March. But look, today it's been coming down ever since March. Today is at 6.02. So the peak for the government's data was in June. The peak for this was in March for Trueflation. So this could be boding good news because this may be a leading indicator about 3 months.
We're thinking 3 months or so. Okay. Yeah. Well, that's huge.
So in the coming months, we may see we're hoping continued lower inflation, continuing to go down. Okay, so big news. Wednesday, December 14th, yesterday, Jerome Powell gave his speech. They increased the Fed rate by 0.5%.
Right. They were wondering, are they going to do it, by 0.75% or 0.5%? Yeah. And as the weeks went on, it went from greater odds that it was going to be 0.5% versus 0.75%, which was a great sign and actually happened.
Okay, so this is a cool chart. Now, what we want to really kind of make sure you focus on, if you can see this chart, the purple line here is where the rates were. This is a probability chart. The rates were last month were following this purple line. As you can see these highlighted fields here. That's basically where we see the chances, the odds. So Wednesday morning, there was an 81% chance the Fed was going to raise it at 0.5%, which they did.
Mm-hmm.
And you can see this is the trend where they see rates going this today.
Mm-hmm.
Yeah, last month it was over here. So this is good news, meaning it's shifted over. Rates, the probability charts are showing that rates are not going to go up as high.
Right.
And we can see that turnaround happening. Really, it's kind of plateaus in March of 2023 through July of 2023. And then rates actually have, according to the Chicago Mercantile Exchange, now they're betting that rates are going to come down.
Right. Now, some people may be saying, what are you guys smoking? Rates just went up. Why are you telling us rates are coming down? Remember, we are talking about the forecasted rate on where the feds will be pushing that. And as you look, the difference between the purple and the green line is about the difference that we've seen in the actual 30-year mortgage rate. So what we're doing is telling you what the mortgage rates have been doing, which the mortgage rates look into the future.
Yes. So again, these are the Fed rates right here. And this can be confusing when it says 4.25 to 450. Just look at that second number. That means 4.5%. Over here is 4.75, 5%. Okay, so next chart here, just looking back, this is about 1987 to today, where we see the Fed funds rate right about here. This is what it would look like if rates were to go up and then back down starting next year. So that's the action we're looking forward to seeing.
Right. And again, what we were saying before, this is not the 30-year mortgage rate. This is the actual Fed funds rate. And it is going to continue to increase. So why do you keep talking about it coming down? Because again, they're forecasting that it's going to start slowing down. And at some point they will start reducing the Fed funds rate.
That's right. And as you can see here, the 30-year fix today is at 5.82%. The 15-year fix is at 5.25.
The 30-year FHA, 5.5. The 30-year VA, 5.5.
And remember, folks, these interest rates were like almost 7% as we were, just about 3 weeks ago, 4 weeks ago. And that is where this is the movement of all the movements of mortgage rates have been moving ahead.
Right. Looking into the future. This is why they're coming down.
That's right. So if the Fed rate continues to move, or at least the expectations continue to improve, we're going to continue to see interest rates improve as well.
That's right.
Keep in mind that these quotes have no points. There's no extra fees. They're based off of these loan assumptions for conventional FHA and VA loans. And be sure to, if you like what we're doing here, be sure to subscribe, comment, and like. We'll be back.
All right. Thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.